And we are live. Good morning, crypto warriors, and welcome back to the Gentlemen of Crypto, episode 514. Today is Friday, December 6th, and I'm King, here to bridge the gap between community and crypto every day, Monday through Friday. And today's top stories. Known crypto hater Sherman to chair Congressional Subcommittee on Investor Protection. Deutsche Bank research crypto to replace fiat currencies by 2030. Bank for International Settlements exec shows new fondness for CBDCs, and Komodo's Atomic Dex Exchange runs a PTP full node in your web browser. That's right. But first, of course, let's go ahead and check out the prices on the day. Bitcoin's at $7,430, up 1.22%. Ethereum's at $147, up 0.27%. Ripple's at a whopping 22 cents, up 3.43%. Bitcoin Cash is at $211, up 0.34%. Litecoin's at $45, up 1.15%. And EOS is at $2.71, up 1.32%. So we continue to have our daily chop. What's going on, Christopher Ladd, Ronan Bushido Style? Happy Friday to you. Tessa Hall, Crypto Q, what's going on? Long time no see. Hello, everyone. Sergeant Crypto, welcome to Formation. All right, top story. Known crypto hater Sherman to chair Congressional Subcommittee on Investor Protection. That is right. I like how they have the mean United States ego here. This is how I'm assuming Sherman looks. But it looks as though the anti-crypto United States Congressman Brad Sherman, a Democrat out of California, has been elected to serve as chairman of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets. On December 5th, chairwoman of the House of Financial Services Committee, none other than Maxine Waters, announced that Sherman was elected to take up the position of chair at the subcommittee that oversees the Securities and Exchange Commission, the SEC, the New York Stock Exchange, and the Financial Industry Regulatory Authority. Now, of course, everybody's wondering, who is this Sherman guy and how did he get the seat on the subcommittee? Well, Sherman, who is an American politician, has serving as a Democratic member of the U.S. House of Representatives since 1997, is known to be a formidable opponent of Bitcoin and cryptocurrencies in general. Largely pro-crypto Congressman and Sherman's colleague on the Financial Services Committee, Warren Davidson, a Republican of Ohio, recently told Cointelegraph that Sherman really doesn't like anything in the cryptocurrency space. Davidson went on to say, and this again is another of his colleagues, telling Cointelegraph, and I quote, "In my view, Sherman's goal is to essentially to try to ban the internet." He's like, we're going to ban crypto. We need to ban crypto. The only reason to have any crypto asset is to launder money and evade taxes. Go back, rewind the tape. Every hearing on crypto, that's Brad Sherman. He doesn't like the space. This is crazy because there are people like this who exist. We talked about the interview I did with the FINRA regulator back in March of 2018, I believe it was. It may have been 2017 or 2018 at CIAA in Charlotte, North Carolina, where I asked him about cryptocurrencies and Bitcoin. He had no clue about the technical side of it or largely what they do. All he knew was that they need to ban it or regulate it and control it. That was the only answer he had for everything. He didn't know much about the technology. He just kept saying regulate, or we need to ban it, we need to control it. It's like, well, you don't even know what you're talking about yet. So this is the same thing here, as this guy's colleague said, and maybe he was exaggerating, but he was like, hey, this is a person who wants to ban the entire internet. He still has a disproven thought process, which is all crypto assets are used to launder money and evade taxes, which always brings me back to the original point. Fine, if we did not have any cryptocurrency, what would people use to launder money and evade taxes? Because they still do it. They've always done it. It always will be done. Criminals are going to criminal. So that is not a reason to not use new technology, because people will use it for criminal ways, especially when that technology, if it doesn't exist, those criminal things will still be getting done, except with the U.S. dollar, of course. So, again, this guy is a one-track mind about banning crypto. And, of course, the negative part about all that is he gets to actually be the congressional chair of this subcommittee in charge of it. And this is what we mean by cryptocurrency in the American government is not even getting a fair shake, because you're putting the person who hates it the most in charge of any type of subcommittee to get the ball moving forward on it. It looks like Max Kaiser actually commented on Sherman. He said he has failed to take on board exactly what the dimension of this battle is going to be. He doesn't understand he's already lost. Same thing we always say. It's crazy, and I understand they're trying to protect the American dollar because they go into detail about that. But at the end of the day, first of all, American power doesn't come from the dollar. It comes from the people, or at least I would hope that would be the fact. But secondly that's the problem with these people in office now. I mean, Sherman doesn't understand the war is over. You can't beat technology with bad words and angry feelings. I mean, the technology is there. We talk about it every day. We'll be talking about some more updates to one of the cryptocurrencies out there in the space today. But it keeps improving. We keep talking about it. We talked about yesterday how you can move over $400 million for 60 cents. Listen, I just moved some money off of PayPal to my bank, and it cost me $10, and it was less than 400 million. Let me tell you. So you can hate crypto all you want, and you can say it's going to be used for criminal means. But when people find out you can move a lot of money for a little bit of money, and you don't need a third party, there is no stopping the technology. Now, Sherman did express any opposition to any money that challenges the U.S. dollar role as a global reserve currency. He's opposed to that. He continues to argue for an outright ban on cryptocurrency, of course. And then again, he was stated that crypto could displace or interfere with the dollar. In October, Sherman appeared to give unlikely weight to the idea that a disruptive financial instrument such as cryptocurrencies can succeed in taking power away from the dollar. He's being quoted as saying cryptocurrency either doesn't work, in which case investors lose a lot of money, or it does achieve its objectives perhaps and displaces the U.S. dollar or interferes with the U.S. dollar being virtually the sole reserve currency in the world. Again, in this newfound world, this isn't 97 anymore, okay? In 2019 going on 2020, globalization does exist. Social media and the internet makes this world a smaller place than what it was in 1997. So yeah, maybe one day the United States dollar will not be the virtual sole reserve currency of the entire world. And that's okay because we don't have to be the sole reserve currency of the entire planet. In fact, no government should have a sole reserve currency, which is why people are pressing for Bitcoin, a global financial instrument, basically. So it's crazy that these people in office that we have hired, again, we pay for them with our taxpayer money, they're pushing so hard back against technology just so they can remain number one. It doesn't matter if it helps a lot of people or the benefits of it, even in our American system. When we talk about healthcare on blockchain and all that stuff, all those benefits don't matter. Instead of doing the right thing and just giving us facts, as again, a paid regulator should be doing, instead of doing that, they're saying, no, we're taking on government as a private corporation. We're not asking for your opinion. And we're going to try to ban this technology that works only because it could displace other business interests we already have going on in our government. That makes exactly no sense. And I'm going to go back to what I continuously say, it's called being corrupt. This is corruption. When using taxpayer money, you're not doing the right thing. You're just doing whatever makes sense for your business at the time. So that's not something we need here. I think we need to advance technology. We need to be on the forefront of advancing technologies, even if they could displace the entire financial system. Because if we're at the forefront of all these advancing technologies like cryptocurrencies, there may be ways we could pivot to still remain in that top spot, at least from a financial point of view, and not lose everything. But if we do what we're doing here and we have these elected or appointed government officials that we pay, if we have them continue to go down this road where they're just going to stick their head in the sand and say, hey, we're just going to try to ban these cryptocurrencies. We're going to make them illegal. We don't want anything to do with them. Then other countries will utilize the time in the early adoption phases, and they will overtake us. They will overtake the U.S. dollar, and there won't be any recourse because we're jumping in the game too late. But this war is already over. We keep saying that the same way the war is over when the internet came out. These were the same type of people. I mean, I guarantee you I could probably go back to 97 when he's in office and find a quote about him not liking email, right? In 97, no one wanted email, or at least the majority of the mainstream population, you have it, did not want email. They were making jokes about what is this .com address and stuff. And again, these were people who were supposed to be serious professional businessmen and women and have all these accolades and all this stuff. They didn't want email. And now these same people probably can't stop emailing each other, right? So this is the same guy from 97. My take is if he's still in a government position since 97, and he's just another regulator, then he did not take advantage of the technological boom back then. And it doesn't look like he's going to take advantage of it now. And again, the biggest issue with this is that he is now the chairman of the Congressional Subcommittee on Investor Protection. Investor protection. Air quotes around that. Because as we say, whenever they talk about protecting the investors, which they do not care about, that is when the red flag should go up. And for me, it definitely does here. Let's see, go some comments. What's going on? Jizzy Mac, Allison Thompson, Sergeant Crypto said, I think the currency of choice is the United States dollar. Of course. What's going on? Game of Thrones, Kevin Hodges. Jizzy Mac says Sherman gets all his campaign funding from big banks. He surely does talk like it, right? It doesn't talk like any mom and pop retail investors are getting any money to his campaign. Game of Thrones said, I don't believe in technology. That's basically what's going on here. I mean, you have his colleague, his co-worker, another congressman. I mean, you literally have another congressman talking about this guy wants to get rid of the whole internet. It's 2020, and your peer is telling the world that this is the same guy who wants to get rid of the whole internet. So he shouldn't even be in the room when it talks about when we have any type of talk of technological, whether it's investor protection or anything to do with technology. He should not even be in the room. And not only is he in the room, but he's the chairman. Of course, again, appointed by none other than Chairwoman Services Maxine Waters. Everybody, Auntie Maxie out there is like, no, she is a part of the machine as well, people. You have to see behind some of their big, fancy, and harmonious words and look at who they actually are and what they actually do. She is a part of the machine. It's crazy. CryptoQ said, with all the withholding and donations I made, the Fed still want $8 in taxes for 2019. They're stupid greedy. Right, it's crazy. That's right, Tesla. I am not listening to any of these dinosaurs either. I mean, again, this guy doesn't even want the internet around. What's going on, Tony Nolly? And what's crazy about today's story, following that story, are the next two. The first one being Deutsche Bank research, crypto to replace fiat currencies by 2030. What? Hand clap. This story is being broke by none other than Anna Alexandra off of Cointelegraph. Again, she breaks a lot of the bigger stories. And this says it all. And this is more likely why they just invented this subcommittee. Again, our taxpayer money is paying for this subcommittee, which, by the way, is being led by somebody who doesn't even have the interest of exploring what this technology can do for us at its helm. But our taxpayer money is paying for that. But on the same time he makes these comments, Deutsche Bank is coming out with research saying that, hey, this war is over, as we said. Like, it's going to happen. But it looks like by 2030, the demand for alternative currencies will rise, with digital currencies eventually replacing cash, according to recent research from Deutsche Bank. In the Imagine 2030 report, Deutsche Bank strategist Jim Reed raised awareness of the challenges the existing fiat system has encountered in recent years, specifically with the emergence of cryptocurrencies. Reed stipulated that people's heightened demand for dematerialized means of payment and anonymity could drive more individuals to digital currency. He did say, in order to gain the mainstream adoption and wider acceptance, digital assets need to overcome three major hurdles, which include perceived legitimacy in the eyes of government and regulators, which I don't think to be true. I think it needs to be perceived legitimacy in the eyes of civilians everywhere and citizens more than the eyes of government and regulators. And then he also mentioned that mainstream adoption would also need, price stability and global reach in the payment market and sector. So a lot of stuff going on here in this article. He talks about mobile apps and card providers and key stakeholders also being a big part of that mainstream adoption. And he's also mentioning the different countries that are now exploring CBDCs as a part of his research as well. But again, the headline is the story itself, and that's crypto will be replacing fiat currencies by 2030. And this is coming from a bank's research. These are the last people who want to come out and tell you that. And here you can see here, I put the link for the stories on Cointelegraph. They also link the report as well. What's going on, PFC Wells, Dylan Darchinville? Here's the report, Deutsche Bank research concept, Imagine 2030. I love it. You got a little kid holding a globe, and they go into it. And yeah, here you can see it. A staggering list of incorrect decade ahead predictions litter history. In the 70s, some expected gold to lose all its value in the era of fiat money. In the 80s, most believed quartz watches would completely replace the mechanical sort. In the 90s, a host of publishers rejected the Harry Potter manuscript, while in the 2000s, internet buffs said remote working would end the office. So they kind of talk about a backdrop of all the wrong guesses so far. And then, of course, they get into cryptocurrency being the next thing. You can see here on page 58, cryptocurrencies, the 21st century cash, outlined here in the table of contents. You can also see on page 10, the end of fiat money, how Europe can stop falling behind in the 2020s. Again, they get into it. They get into the technology side of things. And again, this is research done by a bank. The last people who want to admit that the war is over. But guess what? Brad Sherman, the war is over. You are just fighting a losable battle at this point. Another bank is in the news. Bank of International Settlements exec shows new fondness for CBDCs. That's right. We talked about Bank of International Settlements. They're the bank of banks, basically, where all the banks do their banking at. They've shown their disdain for any type of cryptocurrency in the past. It looks like they are now changing their tune as well. General Manager at the Bank for International Settlements, Augustin Carstens, yes, we have talked about him before. I think he's even got Dino today, seems to have changed his negative stance towards central bank digital currencies, now stating that such currencies could open up new possibilities. In his speech entitled "The Future of Money and the Payment System: What Role for Central Banks," published on December 5th, Carstens dug into central banks' approach to emerging technologies in regards to building more efficient and inclusive financial systems. You see what I mean, people? This is what I mean by we have to make sure we control the narrative, not these big banks. Because now this is the same guy. I mean, when I say bash, if Bitcoin was on the deathbed, he came in with a shotgun. All right, this is this guy. He literally came in with a shotgun. Was like, "I heard you sick. Let's go ahead and finish this business." But now he's saying, "Hey, maybe some of this new technology can help us build a more efficient and inclusive financial system." So that's what we've been telling you for years, man. Like, the technology works. But of course, he comes out and says it. Carson said that the introduction of retail CBDCs, which are available to the general public, including businesses and consumers, could bring serious change to the financial sector by opening up new possibilities when it comes to 24/7 availability of payments, different degrees of anonymity, and peer-to-peer transfers. Now, again, he's trying to change the narrative. You can read the report yourself, but one of the key things that he does in the report, and here it is as well, the future of money and the payment system with role for central banks. One of the primary things he does in this report, and this is the first time I've seen it, so be on the lookout, people. He separates CBDCs, central bank digital currencies, he separates them into two categories now: wholesale ones and resale. He's and you can kind of see here in the article, they kind of hit on it, but he continued noting that wholesale CBDCs, where the network participants are financial institutions, could be made compatible with the provision of central bank settlement liquidity. Wholesale CBDCs would not raise difficult financial footprint issues, as they will be largely restricted to institutions that already use central bank deposits, according to Carson's. And then, of course, he talks about retail CBDCs, which is for the general public. Now, he does that because he's basically trying to create two different streams of income, two different financial streams of income or financial systems for banks to continue to operate at. And by separating them and hopefully getting regulations around both of them, you can still have banks operate those things at a high level by law, right? So he goes on to talk about wholesale and retail CBDCs and how they could help banks, but also how they can have a negative impact on the financial system. But bottom line, what I took from this article was the fact that the executive for the Bank of International Settlements has come around to finally say, okay, maybe CBDCs are a good thing. He knows he lost the war as well, and they're trying to figure out ways to make more money or make money in this new technological age going into the 2020s, where we will begin to use cryptocurrency en masse. Because again, 2 plus 2 equals 4, people. It just makes sense. So this is a great news story. Again, coming at the heels of Brad Sherman's comments about trying to outright ban all cryptocurrency, which if he does, he's going against the Federal Reserve now and other central banks, because the Bank of International Settlements Act just now came out and said, okay, CBDCs might not be all of a bad thing. Well, you have one of the regulators you're paying today saying all cryptocurrency is a bad thing. So I'm assuming you all didn't sit him down yet to tell him the difference between a stable coin, a CBDC, and a regular decentralized cryptocurrency, because he said all cryptocurrencies, and this falls into that according to some people, of course. So very interesting to see, but again, it's just going to show that the structure is beginning to crumble, the system is beginning to crumble, and not in a bad way, in a good way, because now the new technology that's here to make things more efficient can be utilized. And last but not least, speaking of new technology, Komodo. Haven't heard of Komodo for a good 2.5 years, ever since they had their last big pump and dump after they announced some big updates they were supposed to do, which were underwhelming at best. But Komodo, I think they announced some big partnership and update that everybody was waiting for, and it was like a crappy website design or something. I don't know, but I know it was the pump and dump of a lifetime when it happened. But Komodo's Atomic DEX exchange runs a peer-to-peer full node in your web browser. Now, I will say Komodo has had a great community around it. Again, I haven't heard from them in a couple years, ever since that last big pump they had, but they're back in the news. The developers of multi-chain architecture project Komodo claim that it has created an implementation of its Atomic DEX that runs a full peer-to-peer node in the user's web browser. Wow, if that works, it could be pretty cool. Komodo developers wrote in a press release shared with Cointelegraph on December 5th that the platform allows for non-custodial cryptocurrency trading through atomic swaps. The company has expanded its Atomic DEX mobile decentralized exchange to work in web browsers on all major platforms. Now, we talked about atomic swaps before. According to release, are a smart contract-based technology that enables users to trade digital assets without any third-party involvement. So I remember the last time I talked about them is when I mentioned Jack's wallet that has them, and of course, who else? There's a desktop wallet that runs Exodus desktop wallet. When we always talk about some of these mobile wallets or desktop wallets that have atomic swaps built into it now, which most should by now, everybody should be using the technology, but it allows for you to basically trade in wallet. You no longer need to go to an exchange unless you're going to do margin trading or try and do any shorts. But if you just want to immediately trade one crypto to the next, you can do that with atomic swaps in the wallet. Komodo is saying that they have a decentralized exchange that can run in your browser while counting your computer as a node, and you can still do those atomic swaps instead of downloading that software on your computer. Because, as it stands, like I said, Exodus wallet, you have to actually download that software on your computer. And even with Jax, of course, that software has to be on your phone. Now, before I even look at the technical side of it, my first instinct is a security threat, and it's online, which technically would make it a hot wallet. I don't know. It remains to be seen. It looks like users who wish to make trades using Atomic DEX will be able to do so by simply visiting a URL and logging into their account. There's no need to download an application. Once a user visits the page, the Atomic DEX application will load into the browser and spin up a standalone peer-to-peer node. The application will be entirely client-side. No sensitive data or private keys will be transferred to a third party over the course of an exchange. And they said, while it's common to hear industry participants throwing around the terms DEX and atomic swaps to describe their tech, most solutions on the market have been pure hype or have seriously compromised their stated commitments to decentralization. Now, the DEX part is true. For the atomic swap part, not so much, because either you can do it or you can't. Can I log on to this wallet, or can I, log on to this mobile wallet, desktop wallet, whatever, and trade in app, basically? That's a yes or no question. The DEX part, I agree with. Komodo's Atomic DEX is undoubted industry leader, and we are fully prepared to back that statement up, full stop. Oh, they are talking super spicy, huh? We've been working on atomic swap since 2014 and have even collaborated with their inventor, Tier Nolan. I'll give Komodo that as well. They have been talking about atomic swaps for a while, but again, that's not the big technology piece of this. So I'm not sure why they're touting that. Atomic swaps now have been out for a couple years, and again, you either have it or you don't. I'm not sure why they're touting this as one of their new signature updates. I think the decentralized part should be talked about even more. But they're saying they've conducted over 100,000 swaps so far. So basically, they're saying it works. Again, I believe them that their atomic swaps work. It should. It works on many platforms. I'm more concerned about the DEX part. And then they talk about the DEX part, saying that, when asked by Cointelegraph whether they're having a centralized server distribute the software to web browsers at each use could have negative cybersecurity implications, they said not really, as it's no more centralized than any other software distribution platform channel for any other DEX. By that metric, other websites and repositories where people can download a DEX or any decentralized app can also be seen as sort of a decentralized or sort of a centralized distribution medium and central point of failure. So I get that as well. That's kind of fair. And again, you can read this article. It's on Cointelegraph, the Komodo article. They're talking about more atomic swaps. And the last piece is what's also important. Atomic DEX is natively compatible to be used with the APIs of various centralized exchanges. Again, so they can basically connect to different centralized exchanges. So any end user could attach his DEX node to a centralized exchange through their API key. This way, the user can mirror this the centralized exchange order books over to the DEX and just add a small margin to even make a profit out of the deal. So again, this sounds great. I haven't used it yet. I do love the artwork from Cointelegraph showing this distributed technology, or just basically just distributed. I can't think of the word right now, but the distributed way of the technology is going where everybody's peer-to-peer and connected here. Again, my biggest thing is security. We know a lot of hackers have been literally recreating websites and changing one word, a letter, something that's very minute and you can't really tell. And I can see that happening here. If you're going onto a website to operate a decentralized exchange and turn that browser into a node, you have to ensure you're going to the right website. I'm telling you now, the phishing attacks will start where hackers are trying to basically get people to sign up on a fake website or log into a fake website that's going to look exactly like theirs in the browser. And as soon as people do that, they'll have their credentials. So it's one of those things where if this works, you just have to make sure you're typing in the right website address, which you have to do already as well. What's going on, Pangy Smoke? Other than that, folks, that is the show for today. All the crypto news, not a lot going on. I saw a few other updates coming in this morning, but mostly they're for institutional investors out there. So a lot more hall passes being given out as always. But other than that, make sure you smash that like and share button. And of course, I'll be updating the podcast, so make sure you give us a rating on that as well. We're on iHeartRadio, Spotify, Google Play Music, and of course, iTunes Podcast. What's going on, crypto and culture? Last quick shout out. And as always, have a happy Friday, and I will see you all next week. Cheers.